President Cyril Ramaphosa says the visa reforms gazetted by Home Affairs Minister Leon Schreiber are a key step towards attracting international skills and investment, growing tourism and creating jobs. The gazetted notices contain details of how the point system for critical skills and general work visas will work, as well as the requirements for a remote work visa. Ramaphosa has stated that these reforms remove bureaucratic hurdles and are designed to make it easier for SA companies and multinationals to hire skilled workers. It also makes SA a realistic prospect for remote workers seeking an opportunity to combine work with tourism. And given this, the head of state says the new system is a passport to faster economic growth. Mining output has increased. Production rose 0.3% year-on-year in August. That follows a 1% contraction the previous month. The improvement is as a result of high manganese, chromium and platinum group metals output. Meanwhile, factory production shrank 1.2% in August. That's from a revised increase of 1.6% in July. The decline is largely due to a contraction in the motor vehicles, parts and accessories segment. Manufacturing has come under pressure as the domestic economy remains subdued and a lackluster global manufacturing environment continues to weigh on export potential. Equites Property Fund has declared an interim distribution per share of 66.5 cents. That's up 1.7% on the previous period's figure. This comes as the logistics-focused REIT aims to simplify its core business. Part of that is a disposal plan. During the first half, the firm sold off a further 600 million rand in assets, and Equites expects to dispose of a further 900 million rand in South African assets in the second half. The group has also stated that it's on track to meet full-year distribution guidance of between 130 and 135 cents per share. Newpark has reported a near 12% slump in half-year funds from operations per share. That's due to the reversion in rental in Hellerman Titan and increased property and administration costs. The firm, whose portfolio includes the JSE's head office, has declared a dividend of 30 cents per share. That's a 14% decrease from a year ago. Chrome has given Teresa's operation some shine. The miner has achieved record output of the mineral during its year to end September. And that's at a time when chrome prices were on average close to 14% higher. That's helped offset its platinum group metals operations. PGM production rose just 0.2%, but prices for the metals declined on average 28%. Looking ahead, Teresa expects stronger PGM prices over the next year or two. That's as it believes that the internal combustion engine will remain relevant for a much longer time to come. The rand could rally, that's according to Anchor. A note from the financial services firm says that while global factors have turned against the local unit in the past week or two, this is temporary. And so there's scope for the rand to trade at around 16 rand to the dollar in the next year. That's as the domestic reform agenda takes hold. In international news, according to a source Asian car maker, Chery has started assembling cars in Russia for sale in the country at 3 factories vacated by Western rivals, including Volkswagen and Mercedes. Let's take a look at this report for more.
Chinese car maker Chery has started assembling cars in Russia at 3 factories vacated by Western rivals. Reuters sources say that includes plants once used by Volkswagen and Mercedes. Chinese car makers have grabbed more than half of Russia's car market in terms of sales. That's after most Western brands abandoned the country following Moscow's 2022 invasion of Ukraine. Now the Chinese firms are extending their reach to account for more of Russia's domestic production too. It all underlines how Beijing is playing an increasingly influential role in Russia's changing manufacturing landscape and economy. Chery now accounts for almost a fifth of Russia's car sales. And the sources said it's importing nearly finished cars and then completing assembly in the 3 Russian factories. China's biggest car exporter is likely to be betting on strong demand in the country. The sources say that's as Russia's domestic market struggles with limited output and underused production capacity. And this customer is coming round to the idea of a Chinese car.
Of course I prefer European cars, because I used to drive an Audi and it's hard for me to switch to a Chinese car. But I will probably have to switch anyway. The overall design is quite pretty, well done. I don't know how it will be to drive though, because it's the first time for me.
Chery said in a written statement it supplies the Russian market with passenger cars, but doesn't plan to build or buy its own factories there. It did not comment in response to Reuters' questions about the assembly work at the factories. One source said the firm wants to minimise publicity about its operations there, amid Western scrutiny of firms that cooperate with Russia.
And Japan's fast retailing owner of a clothing brand Uniqlo booked its third consecutive year of record earnings today, boosted by widened profit margins in its international segments. Let's take a look at this package report for more on its performance.
It's been another blockbuster 12 months for Uniqlo. Parent firm Fast Retailing posted a third straight year of record earnings. Operating profit jumped 31% to over $3.3 billion. That was ahead of both company and analyst forecasts. And Fast Retailing says it expects profits to climb yet further next year. Known for its affordable basics, Uniqlo has been boosted by a weak yen. That increases the value of its overseas earnings and encourages tourists to splurge while they're in Japan. China looks less positive, however. With more than 900 stores there, the country is Uniqlo's biggest overseas market. It has become a bellwether for retail in the world's second biggest economy. But China's sluggish recovery has sapped consumer confidence, weighing on sales. Founder Tadashi Yanai, Japan's richest man, has long aimed to make Uniqlo the world's biggest fashion retailer. European rivals H&M and Zara stand in the way of his goal. But Yanai says a consumer shift from luxury to value will help his firm grow more in the years ahead.